Good morning, guys. Welcome back. I need to rant because I am watching this stupid MyPillow commercial. I'm sure you've seen some of these maybe in the past, but first of all, I've ordered a MyPillow before, and it wasn't that great. It was comfortable for like a little while, and then it starts to sink in, and it's not really supportive like he says it is. But maybe he's improved it over the years, but this is what I hate. This false advertising bullshit, dude. Check this out. So he's going to show them the pillows that they currently sleep on and why it's bad. Okay, down pillows, I can't really speak about those because I don't have that kind of pillow.
You feel comfortable, and guess what? It goes down, and you have one bent neck. So this pillow's no good. And I see you're sleeping.
Okay, all right. Look at the pillow that he's. Now look at the pillow he's putting down. Notice the way he put the pillow. Now that memory foam pillow, it's shaped like that for a specific reason. It has a really high edge, like the one that this guy's about to put his head on. And then it has the low edge, and if you're sleeping on your back, you put your head on the low edge. You don't put it on the high edge. But watch how he conveniently puts the pillow in this position, so when the dude sleeps on it, that's the wrong side of the freaking pillow, you stupid asshole. So of course it's not going to be the right height. So, oh, that feels better. Yeah, turn the pillow around and it'll feel better, you dick. Anyways. So I hate when commercials false advertise like that. Clearly the dude should have just flipped his pillow around. He would have been perfectly fine. But this dude did that specifically to make people think that those kinds of pillows are bad. Let me tell you, I have one of those pillows, and it's the best pillow I've ever had. I sleep like a baby every freaking night. So, dude from MyPillow, you can suck it. Go after yourself. Anyways, I'm gonna hit live. Anyways, futures are up, so we should have a good day today. And yeah, so I'm gonna eat some breakfast. It's only 7 o'clock in the morning, so the market's not open for another hour and a half. And I don't want to make this video too long, so we're gonna come back later in the day and see how we do. So, thought the market was gonna be good today, and the Dow is actually doing okay, up 100 points. S&P was up a little bit, but the NASDAQ is getting absolutely shit on, and we dropped about $30,000. So that happened, and it's kind of annoying, but you know, as the balance grows, the losses, the bad days will get bigger. And a lot of my stuff that I've set stop orders for triggered, and now, of course, the stocks are going back up now. And so now I can't buy back in at the same price. I'm gonna have to pay more money to get the same positions that I just sold. I'm gonna get back into Universal Display. Let me show you what's sold actually. So my Universal Display called sold, and I was about in the money. I was like right at the money when it sold. So I did make a profit. I bought it like at $20. So I did make a good profit on that one, like 75% or something like that. And the Apple one sold, and I had a few different strikes, 220. This one got split up into a bunch of calls for some reason, or a bunch of orders. I had 210 that sold, and then the 200 that sold. The 200 I think I was up the most profit-wise, and so I'll see if I can calculate that if I have time. Otherwise, I might forget. And then the Google and Facebook sold. So now, on the positive side, the Universal Display calls I did want to get out of because I was already in the money, and I was going to look into getting some new ones out of the money anyways. And so what I think I'm going to do is, I had 9 of them, so I'm going to buy 9 more calls, maybe with like a 185 strike this time instead of 175. That way it'll save me some money. Same expiration. Luckily we hit that strike pretty quickly, so I'm going to try to get back into everything that I was in. However, the Facebook and Google had a June expiration, and I don't want to buy a June expiration again, especially because Google was like pretty far out of the money, and I don't know if Google's going to hit that by June. And so that one I will have to probably spend more money on. I might not even be able to get 2 calls. I might have to just get 1 call. But I'm going to do some trades. I'm not going to film it because it's going to take forever. And if you have any questions, I do show my trades on several other videos. And so if you've seen the videos up until now, you've definitely seen how to do it. But if you have any questions, comment in the comment section below. I can kind of answer some questions. So I have to also tutor at 3 o'clock and then again at 5:45. So probably won't be filming much until later tonight, and just gonna try to, get back into some calls. At the end of this year, I'm probably gonna do some more stocks, less calls, but still mostly calls. But just to reduce my risk a little bit. But I wanted to finish this year to see how much I could have made doing all options. And I'm hoping that December is okay. So yeah, I'm just gonna go with my gut. I think the market's gonna be fine. We're not in a recession. So yeah, I'm gonna do what I'm gonna do, and then we'll check back when the market closes. All right, guys, we're back. It is 10 o'clock, and yeah, so we got destroyed today, pretty much. Got just completely shit on. But like I said before, I don't think we're in a recession. I was reading articles today. It seemed to just be a much expected correction, and if that's the case, which is what everyone's saying, that's fine. I mean, corrections happen all the time. And one of the things I saw, and I'm going to talk about Netflix right now. I'm going to look at their stock because they got hit pretty good today, but they went down a lot more and then they came back up a little bit. So they actually dropped 5% today, and let me explain why that's not bad. This one guy was talking about on CNBC, he was going over a graph from Netflix from like the last, no, not Netflix, I'm sorry, Nvidia, from like the last like 20 years basically. And he said that like whenever they had a correction like this, and please don't quote me on this because the timeline I wasn't sure of. I'm a little fuzzy on the memory, but I do remember these numbers. The first big correction he saw was 23 or 28% in one day. So it dropped 28% in one day, then it kept going back up. So he was like doing some chart analysis. It went up. The next correction, like several years later, went down 23% in one day. So that was like a big correction for them. Then it went up again. Then the next correction came, 18% drop. So the trend here is that after it goes up a lot, its corrections are getting smaller and smaller. And so he said if this trend continues, this should just be nothing more than a correction, and Nvidia will continue to go back up. He said what will worry me if this correction is more than 18%. But Nvidia only went down 6% today. So that's a very, very small correction compared to its previous corrections. And they were down to 191 a share. Now they finished at 196. And so like I'm trying to look at the positives, and I really do see this as a big positive. This was a very small correction in the grand scheme of things if you look at its other corrections. And so I think Nvidia has very strong potential to go back up above 200, and I actually held on to that call. I didn't sell it. I forgot to place a stop order on it. So, but yeah, I'm glad I held on to it because it went down to like $15 a share. Now it's up to $17.73. So I made some money at the end of the day with them, even though I lost a lot of money overall. I still think that this correction was a pretty much average expected correction, and I would have been worried if like they tanked, if like the actual stocks tanked like 20% in a day. I think that would have been like, okay, something's bad's happening. But these stocks only dropped, like Adobe 4% down, Twitter 4% down, Netflix 5% down, Nvidia 6% down. I think it's just a correction. And like Square 8%, that was probably one of the bigger ones. That was like the biggest one on the watch list. And actually, let me stop showing me, but you can see like those are the worst ones on my watch list. And I feel like that's far from like a crash. Like this is just a correction, and I'm convinced that it's going to be a correction. And look how many stocks actually did well today. So if you look at all that and you analyze it, I personally think it was just nothing more than a correction. And yeah, when you're trading all options like I'm doing, which is like risky as frick, you know what I'm saying? Like this is pretty much like betting your whole money on black at a casino, what I'm doing. So I really don't recommend doing this unless you have money you can afford to lose. And again, I already talked about why I'm doing this, but it's super, super risky. And when you're doing super, super risky, you have the potential for super really good rewards, and you also have potential for pretty shitty days. And so today was an example of that. But I'm looking at the market as a whole. I see a lot of positives here. We did get into Domino's, we did get into Citigroup, so by diversifying, we did make a little bit of money with those in Home Depot. So these are three stocks that aren't really tech related, even though Domino's Pizza is pretty technologically inclined right now. But basically what I'm trying to say is three stocks that I diversified that was not in tech, they paid off for me today. And had I not done that, you know, this is like what, about $1,400 that I would not have made if I just stayed in all tech. So I'm kind of happy that I did diversify in that regard. Having said that, we still just got completely destroyed today, and this is not even how much we lost because a lot of my stuff sold. So if you look at my balance here, we did drop like about $30,000 pretty much on the dot, right around 30, because I'm pretty sure we were at 207 yesterday. So again, based on how I'm trading, and this was a bad day, I think it could have been a lot worse, and I'm not freaking out quite yet. I did get back into Universal Display. I lowered my strike, or actually I raised a strike, but I raised it because they're at around 177. They actually made a comeback as well. And so I think they can definitely hit $200 by January next year. I'm still haven't gotten back into Adobe and Facebook yet, but I'm going to be looking to do that. And yeah, so let's look at the watch list one more time, and then I'll wrap it up. Because this video is going to be pretty long. So there's the second page. So we had almost 2 full pages of gains. Citigroup was up there. And then we have, of course, the tech stocks that just people, and I'll talk about why people were going away from tech. Okay, so I was reading an article about, it says NASDAQ falters as investors flee from tech and go into banks. And I think the big reason they're doing that is because the tax reform bill is getting a little bit closer to being passed. And if it does, the banks are going to benefit tremendously. That's why I'm in Citi. I should probably put a little bit more in, calls in the bank stocks, just because add a little more diversification and, you know, lower my risk a little bit. But I was reading, and you know, they were talking about, yes, people are putting in banks because the Trump thing could help them. People were taking profits from tech. But then I read this. It says, in the latest batch of encouraging economic data, the U.S. economy grew faster than initially thought in the third quarter, notching its quickest pace of expansion in 3 years. And that's just an overall generally good thing, because that's about the whole economy. And when the whole economy is doing well, tech, a lot of stocks will do well. And so I think that was a tremendous thing to read, and I was really excited about that. And so with that said, Chipotle is finally looking for a new CEO. So they talked about that, which they should have been doing it a long time ago, because their CEO is, a lot of people hate him for how he's been handling things. But anyways, yeah, so overall, about today, yes, it was my worst day of the year, but this has happened a couple times before. I was expecting like corrections, and they happened, and I was sitting in the most risky position you can sit in when that happens. And so I'm aware, like, I'm definitely looking to go back into stocks in 2018. I want to see how well I can do for the rest of this year with just options. And then in January, I'm probably going to start going into stocks again. So we'll talk about that later. But anyways, sorry for rambling. Thank you guys so much for watching. If you did like this video, please hit that like button. Make me feel better. It would make me feel a lot better if you can like this video, even though I just got completely on today. Share with your friends, subscribe. That would make me feel so much better. But yeah, so thank you guys so much. Hope you guys had a better day than I did, and we'll see what happens tomorrow. So until then, you guys have a great night.